Target second quarter earnings coming in at $1.80 a share. That's pretty good, 41 cents above consensus. And revenue, though, was not as good as the street was expecting, $24.77 billion, and the street was looking for $25.16 billion. The retailer then also slashed full-year earnings guidance to approximately, I think, where the street was, though. And so-called shrinkage, as you see it on the nightly news every night, has been an issue for Target. That's where you see crime, whether it's organized or not, but people walking out with stuff and not even being challenged a lot. The retailer previously warned that it was on track to lose $500 million due to theft this year. Join us now, Michael Baker, a managing director and senior research analyst at D.A. Davidson. What kind of bothers me, Michael, is that we almost get inured to it when we see it so much and say, 500, there's $500 million involved here, but that's not really material, and it's almost like the cost of doing business. That's the world we're living in right now. Is it material?
Well, it is material. As a percent of sales, it's almost 0.5%. And remember, it's 500 more than they originally planned. It was actually more than $500 million.
Okay. Yeah.
I think part of it is, you're right, people have become, sort of immune to it. And I think that is what the management team is trying to combat here, is get the message out. Hopefully people in Washington are listening and help and do something about it, because I think the public has gotten a little bit too used to it and something needs to be done.
Do you think the stock has seen its lows? Nice move today off a 52-week low. What other issues does Mr. Cornell have to deal with right now? It's hard to run a retailer. I can't imagine trying to get things that are hot every season that people want and bring people without having a bunch of stuff left over that you messed up how much you stocked the shelves with. It's a very difficult business just to do it normally, and then you got all these other issues swirling around it. What do they have to maneuver through?
It's been a couple of years of problems. I do think the stock has hit the low. I think one of the issues here was, I think everyone knew it was going to be weak this quarter because of some of these pride issues. We just didn't really know how weak it was going to be. I feel like this is just a little bit of a by the news type story. No matter how bad it was going to be today, get the numbers out and let's move on. And in fact, the numbers, they weren't great, but they weren't terrible. So I think we move on from that pride issue. The next challenge really is going to be the holiday season. So we'll see what they have to say about that today. The one thing in the release that strikes me as a little bit odd is that from your reporting this morning, your team's reporting, it does seem like the pride issue is behind us. That impacted June. July was better, but why the lower back half sales guidance? Why down mid-single digit, which is really no better than what they've been doing? So I think we'll have to flesh that out in the call. But again, the next challenge is getting the holiday season right.
That sort of was the head scratcher. Why still lower unless you're really sandbagging? And Michael, I'm just wondering if you removed, let's say you had a magic wand, you took away the shrinkage issue and you took away the pride issues. Where does that leave Target in terms of valuation and where it should be trading relative to Walmart? It still has the mix problem.
Correct. It still has a mix problem, so still probably underperforms Target in terms of same-store sales. But I do think the valuation would be higher, trading at 15 times consensus estimates right now. And those estimates are not likely to go down very much because the EPS guidance is roughly in line. That's too cheap. That's below its historical average. It usually trades at about 17 times. I think without those issues, you'd be back at that 17, 18 times multiple. Remember, the big story this year for Target was supposed to be a massive rebound in the operating margins after last year's issues with markdowns. That got kind of derailed in the spring because of this pride issue. But if we can sort of, move past that, I do think there's still a margin recovery story here. Maybe not back to where it was during COVID, but remember, pre-COVID, the margins were always between 5.5% and 7.5%. They went to 3.5% last year because of these markdown issues. We think eventually they get back to that historical range, and that's a lot of upside in terms of the margin and profitability from there.
Michael, whether a company gets involved in some of these things, and it's not all about the bottom line. Obviously, companies can think that I want to be, I want to act on certain cultural issues that I think I can make a difference, and I believe in things. But Courtney reminded me, at least, of the bathroom issue from a couple of years ago with Target. I didn't realize, and they had 4 quarters of sales that looked like they were affected like that by that. So that did not deter them from deciding to take the latest initiatives, the pride initiatives. I look at Bud Light, their ads now, I mean, they're back to Clydesdales and armed services and waving flags and things like that. They look like they're just totally going to move on from trying to make a statement in other areas. Do you expect Target to pull back on this or to double down on things like this?
It's a very difficult issue. You said it. I think you're right about that. It does seem like they are pulling back a little bit because, in their words, the safety of their associates and shoppers. So, this is a big issue in June. It does feel like they pulled back a little bit, right or wrong. That feels like the strategy that they're going with.
But companies don't necessarily do it because they're expecting to be rewarded financially for it. Sometimes they're willing to take some lumps, and they just think that for the greater good, that's in the back of their mind. That's why they're doing it. It's not all the bottom line. What do you attribute it to?
Their associates that they want to make feel welcome. There's a lot of reasons.
Employees,
to do these kinds of things, and they probably are willing to take some lumps. I think the lump that Target took this quarter was probably a little bit more than they expected.
Yeah, a little lumpier.
It was a big lump. Michael, on this conference call this morning, will we hear about back to school? Because I would imagine much of back to school is done.
We will be asked about, or they will be asked about back to school. We have a chart that we publish all the time that shows in 23 of the last 29 years, trends, broadly speaking, for back to school have correctly predicted trends for the holiday season. So back to school is very important. It'll absolutely come up on the call today.